If you're thinking about starting an insurance agency in 2025 or 2026, there's a few issues you're going to run into with carriers leaving certain states, commissions being cut, and a lot of the tech issues that you're going to run into that you may not have knowledge of. If you understand the roadblocks that you're going to run into, there are ways around these that you can use to your advantage. Starting with the first issue most people have ran into, and this has probably been in the last 6 months, a lot of carriers, because of a lot of weather-related claims, or just claims in general, have left states. For example, California lost Farmers for a while. They lost Allstate for a while. They lost Progressive, I believe, even for a while. And I think that Travelers was even thinking of leaving the state as well because the rate couldn't come up to what they needed to make profit on. And there's just a back and forth, and there's wildfire claims, and there's just huge, massive losses. All of those led to a really, really huge issue where some of the agents have left those companies even to go start their own independent agencies. So that's one of the things that you need to be aware of is depending on your state, and yes, most of them came back, they're just limited and there's restrictions, right? So there are issues depending on the states like California, states like Florida, you're gonna have struggles with states like Alabama, states like Michigan a little bit as far as homes go. Each state has their own little issues. If you're doing Tennessee, if you're doing Virginia, if you're doing a little bit of Texas, usually those are okay. So it depends on the state and where you live, because if you know that you're a high-risk area, there could be an advantage that you have if you live in that state. For example, I would like to insure in Florida. The problem is most companies don't want to license somebody outside of Florida right now. They'll license you, but the companies don't want to appoint you. And the reason they don't is because it's very expensive. And a lot of people going into Florida don't know what they're doing. They haven't done it before. So the most likely obvious option that you're going to have if you live in Florida, different story. You're a resident licensed agent. Where I'm not a resident licensed agent, I'm not likely going to have that advantage to where companies would like to appoint me. Same thing goes for Texas. We've got a ton of companies that we use in Texas for home and auto, but most of the time it's just auto. A lot of the companies don't let us do the home because they've had a lot of issues in the last several years to where they're not quite open to letting new business come in from out-of-state licenses. So those that live in Texas, those people or those companies are willing to let them write the home product where I don't have access. So be very careful on what states you're looking at writing business in and if they're a resident state versus non-resident. Expectations of the carrier is the second piece that you're going to have to think about. There's something called a combined ratio mixed with something called a loss ratio. Because of the loss ratio, that means if we take in $1, we pay out 97 cents. That means we profited, or the company profited 3 cents. That's good for them. Sometimes they don't even mind losing 120% as long as they're going to make it up over time through the life of the policy holder. And in that case, you got to be very careful because when you look at companies that have a high loss to income or loss ratio, then what's happening is they're going to want you to have a high combined ratio. And what a combined ratio does is that's more of you writing more than one policy. So when I write home, am I writing auto with it? Am I writing the umbrella policy with it? Am I writing the motorcycle and the boat and the RV and the golf cart? All of those pieces, the more numbers that you add or more policies you add to an account, the fact is they stay longer. The people that have home and auto and umbrella with you are likely going to stay up to 30% more or longer than somebody that has just auto. I can actually attest to that. I've seen it over and over. Monoline autos just shop. A lot of them are shopping around for different deals, different discounts, and they usually can find something better, or someone will change their coverages and they think it's better. So at the end of the process that you're going through, it's going to be a lot more work, and companies understand that. So when they know that the longevity isn't there, they're going to start to require you to sell more of one product or more products in one household than you typically would expect. If you're joining an agency like State Farm or Farmers, they're going to require you to automatically sell those just to get your bonus. You've got to sell a certain number of life policies. You've got to sell a certain number of home policies. For those that are in annuities and retirement, then you got a certain amount of those. Otherwise, you don't get that extra 5% or that extra 12%. When you mix that with what we just talked about, the restrictions in some states, it's near impossible to make money depending on the companies that you're with. Part of the reason we talked about independent agents, which we'll discuss later on in the video, but the main thing that they're looking at is the third piece, which is low retention. And retention makes a huge difference. When you're new to an agency owner and you're starting off as an agent, you are naturally going to have probably a high retention for the first 90 days, maybe even 6 months. And then as you start to write people that you don't know, you're working on friends and family and building that structure, and then you start getting people that are referred to you, people that you aren't normally working with. Maybe you're buying leads. And if that's the case, your retention's going to lack a little bit as you start to get busier. You have to move your attention to different spaces. You're wearing the sales hat, the underwriting hat, and the service hat at the same time, depending on your growth model. But at the end of the process of that, you're going to notice that your retention will suffer if you don't have the availability to service the policy as well. On top of it, if you're just writing what we talked about, the monoline auto, you're going to see the retention be low on that either way. Well, these companies take into consideration, how good is this agent? Are they writing good business? Is it multi-lined? Are you selling at least 1.5 to 2 policies per household? That's what we focus on. And our long-term goal is going to be 2.5 policies per household. But are they doing what we're looking for them to do? Also, is their retention good? Is their loss ratio good? These are the things that carriers look at, especially when you're trying to join some of the more exclusive carriers that you can't necessarily get into today. The fourth and probably the largest issue that you're going to have with starting an insurance agency is getting appointments. They are very difficult to get, especially right now. They were more difficult 6 months ago, and 6 months before that, they were impossible. So they are getting better over time, and going into 2026, I think we're going to be mid-2026, if not near the third quarter of 2026, before it starts to really loosen up. We've recently had it loosen up, as I mentioned before, but overall, getting an appointment with Progressive seemed simple, and it was simple 5 years ago, to where you could easily get that and start your business rolling. But because of all of these managing general agencies and all of these networks that people have joined, people are just writing any type of business. So you've got your CPA that did pass the exam, that, not to fault you, but some of those are out there and they don't remember what all the coverages were, so they're just writing whatever they want. Unfortunately, those are a handful of the types that join the MGAs because they want that extra line of business. They want that extra income on top of their business. So when they're doing that, they're selling policies that are making that network worse. If there's a lot of claims, they're not asking the right questions. Are there additional drivers in the house? Does other people, are they need to be excluded? Who's this? What's that? All of those things that you would expect to ask, some of those questions aren't being asked. And when it happens too much, too often, these carriers start to restrict and say, we're not going to work so much with these MGAs. We're not going to work with these. We're not going to work with that. And that causes those appointments to get worse for those that are starting an agency. On top of that, when these companies appoint you, you have to have kind of an appointment to get an appointment. You have to be interviewed. And what the process is, you're going to find their information, fill out a form, fill out the application. Then their local person's going to get in touch with you. Most of the time, there's like a district advisor that comes around and visits. So you may not have an office yet, so they might not like that. You may have issues where you're brand new and there's nothing to prove that you know what you're talking about. They might not like that. There's all of these pieces that are going to be a little bit of a struggle when you're starting off a new agency. Now, this isn't to scare you because these are the issues you're going to run into, but the advantages you can take is understand the MGA or the network that you're trying to join. If you're doing it on your own, great. If you're trying to get your own appointments and you're going to say, okay, if I only get one, I'm going to focus on the one. If I can get 3, I'm going to focus on the 3. If I can get 5, I'd probably leave it at 5 carriers because it starts to get overwhelming. But in general, that you have those carriers that you need, you may have to grow into them. We had to grow into one of our major carriers. It took us 2.5 years. They had these restrictions, and then they said, we got to hit these numbers. And then we hit the numbers, and they said, oh, just kidding. They're these numbers. They made us do more. And we just had to prove ourselves. And then when everything happened, then we were able to get that appointment. It happened to be around the time they shut down. And so they shut down, and then we had to wait a year, and then they came back. And now they're one of our better companies. So that is something that is worth working towards. It's not a personal bash against you in general. It's just these companies don't want to work with the higher risk type agencies or agents. So they are going to put restrictions on certain networks. Your advantage that you can take is when you're looking at networks and you're trying to find out who's going to be the best fit for me, it's not always the exit clause, which is probably one of the most important pieces, but it's more so, can I get appointed? What's your average appointment rate for somebody that's new? Am I going to get the Progressive? Am I going to get the Nationwide? Am I going to get the Safeco or Liberty or Travelers or Hartford? All those guys are important depending on the state you're in. After you've done some research and found out the ones that you need, how likely are you going to get those appointments? The worst thing you can do is join a network to find out you can't get the appointments and you sign the contract that says you can't leave unless you pay a fee, and now you got to pay a fee to get out just to join another one. So at the end of the process, you're not even wanting to be an agent because it's just a headache before you even sold a policy. The other piece, which is actually an advantage for you, but a little bit of negative for most of us, because not everybody likes to create content. Nobody's just naturally good on a camera, although kids are now. I feel like my kids could just do it in a heartbeat. TikTok, YouTube, Facebook. These are marketing channels that are impossible to ignore. And for those of you that are willing to step out of your comfort zone and explain, talk about products, be the quirky person, grab attention, go in Facebook groups that need your help, all of these things that you're going to market to, it's going to be about a third or half of your business. The industry in general, for most businesses in general, are on some sort of social media platform. So knowing that gives you the advantage of understanding, where does my customer actually survive? Are they on TikTok? Are they on Instagram? Should I be making content for one or the other or both? And where should I focus my time? The negative that we just said is competing for attention, but the positive is you have the advantage because a lot of these algorithms are no longer just giving it to anyone, except for YouTube does help a little bit if you've got some authority. It's the way Google has always worked, and people, it knows the retention, all of those pieces. It will give you more views in those topics. Yes, could I go make a video on snakes in Africa and how they're on my YouTube channel? Sure, it could hit and go crazy, but then the people that would come back to watch my next video may not be relating to the insurance piece that I'm talking about. When you start to build that social media platform, then you want to really just focus on your skill sets. Or if you're trying to be more of a volume person, then something that's entertaining or something that attracts millions of views, that's another way that you can do it. Just keep in mind, in my experience, I don't think that's going to necessarily give you the sales that you want out of it versus being the person that's the expert in the space. I got a video that I'll link at the end that goes further in depth on some of those things that I would do if I was starting from scratch. The other struggle that you're going to come across is a lot of captive agents. Your State Farm, your Farmer's Agent, your Liberty technically was a captive agent, and now they've become a company called Comparion. They've pivoted from becoming a captive agent to a lot of them are pivoting to becoming an independent agent. And for those that know what they're doing, they're going to do really well, mainly because now where they competed on the value and the brand, they're also going to be able to compete on the price model. Because a lot of the carriers, when I have 5, 6 companies versus the one, the 5, 6 are going to get you a third of the time to the sale just because the price is good. The rest of it should be built on value. That's a totally different video. But in general, if you're going to keep people long term and build the whole business, then yes, there has to be more than just price. But now that you have multiple carriers and you have more people switching to compete with you in that market, that it is going to be a little bit tougher as far as competition goes. Got my mini Alani. That's got caffeine, man. That's the advantage, is you got caffeine all day, every day. 3 cups of coffee, an Alani, maybe a water to cool it down a little bit later on. The fifth, probably the sixth one I think we're on, is that the agencies that you're competing with today are becoming digital. So a lot of the things, and I'll kind of combat that in a second, but there's a lot of switching or shifts to where customers can digitally connect to agencies. In companies like ours, we do use AI to communicate with our marketing channel to get people to do appointments. So when we have a lead come in from our YouTube channel, then they come in, they automatically get text from an AI bot that says, hey, we want to work with you, my name's so-and-so, and let's get you set up and on an appointment. If they never go to appointment, then a manual follow-up is processed if we have time to get to it. If we're too busy, which is the goal, and we can write policies and grow the book of business, then we're not going to focus on the low-hanging fruit that a lot of people focus too much on. In general, we're going to be able to have those appointments set up for us. We're going to be able to go out to lunch and appointments are being made in our behalf. All those pieces that give advantage, being able to contact a customer right away when they fill out a quote, is beneficial. And you're going to lose the edge when somebody's looking at multiple places versus the company that has the technology to get in front of them right away. The advantage is you can start doing that. If you are familiar with technology, if you don't know the AI space, trust me, there's going to be a million companies out in the next 6 months that will help you. If not, I've got a company that I can refer you to. There is a little bit of a wait list, but it's Hubly. That's a company that I work with, and it's the one that we use. Just let me know in the comments below if you are interested. I'll send you the link to get a demo with them. If you aren't going to be using technology, as you've seen on this channel, I do say that isn't required. You can use Rolodex, all of those things. You are still fighting with one hand behind your back because, like I said, there is a lot of information, a lot of customers, and a lot of volume to get to the right people. And at the end of the day, our goal as an agent is to help somebody. We're there to be an assistant. We're there to give them advice. We're there to teach them the right coverages. They have options for their car, their home, their family, all of those things. And when we're so focused on the other pieces, it's just volume. It just becomes noise. And you really want to make sure that you have the technology to do all of that for you so you're not spending the time doing the things that you're not great at and focus on the things that you are good at. Now, that's more of an agency for the one person. When you start to grow, you're gonna fall into a couple of issues with hiring the right talent. Are we going virtual? Do we have a home office? All those things. And those are honestly the problems for later on. I would say focus on the policies and focus on the growth of the company, get your book of business growing, all of those pieces that help you grow the agency to be able to afford the issues that you're going to run into later. Trust me, I'm going to make a video on that later down the road. The biggest key takeaway is the advantage that you have now. All of the things that we mentioned seem like, oh my gosh, Mark, I don't want to go in this industry now. It sounds really complicated. The harder issue is most of the people in this industry are 65 or older, 63, 65. They're retiring. And as they retire, yes, there are some major companies out there buying those books of business, but that creates a little bit of a wave. One, people don't want to go necessarily to the big box company. So there is a lot more people shopping than there have been in the past. Two, you can connect with agencies that are leaving and you have the ability to join those companies or at least purchase them or grow with them or pass some clients on or even be a referral partner. Some people just don't want to do commercial or some people just don't want to do homes. And if you're the person that can fit that mold, then maybe they pass a customer on. We actually get a lot of referrals from other insurance agents. So there's a big benefit to the struggles other people are having to the growth that you could have. Yes, the businesses are changing. The ones that will win this battle are going to be the tech-focused companies that still believe in the personal touch and actually building that. Yes, there's going to be all tech and all don't talk to me, just text me, build me, sell me, all of those things that could become a thing. But I don't think at the end of the day or at the end of the processes that customers are necessarily going to always go towards that. You're always going to have people that want to work with an individual, that want that advice, that have run through some issues, have seen claims denied for certain reasons, have seen positive benefits, need to close on a mortgage. There's a lot of ways that AI and technology isn't going to help you. But if you're the knowledge base outside and next to the technology that you have, you're going to have a really big advantage. Let me know what your thoughts are. Is there something that I missed in this context of what is the struggles of growing an agency in 2025 going into 2026? And what are your thoughts? Do you think that if those that don't adapt to the higher technology-based focus, then those are going to be the agencies that don't survive? I'm Mark W. Flockhart. I'll see you soon.